Hey, what's up guys? Today I wanted to show you how to calculate impermanent loss using this free Desmos impermanent loss calculator. A lot of you guys have been asking me about it because it's such a complex tool from a first glance, but it's very important if you guys are treating yield farming more seriously. We need to be able to know the impermanent loss and the risk and reward of our positions before we actually deploy. And when you guys rebalance, we also need to use this tool as well. So this video is very important. Don't skip over it. And if you're new here, my name is Richard. I'm a yield farmer and investor. If you want to take a peek at my portfolio and my strategies, you can look at this portfolio update playlist here. So in this video, I will show you exactly how to set it up step by step, how I personally use it to calculate the risk and reward before I deploy into a liquidity pool. So the first thing we want to do here is make sure you log in. You can log in with your Gmail account. And the reason why you want to log in is we could save a bunch of different pools here. And so then we don't have to set up our graph whenever we want to calculate impermanent loss, right? So for this example, let's use Ethereum and USDC because a lot of you guys probably yield farm Ethereum and USDC. So let's save this graph here. Ethereum to USDC, and then I could put a date as well if I want. And then the first step is I want to fill out the information on the left side. So this V deposit here, since we're yield farming Ethereum and USDC, we're going to be looking at the quote asset in US dollar terms. And if you guys don't know what the base and the quote asset is, the quote asset is the asset that is behind, so ETH to USD. USD is the quote asset. That's what everything is being priced on. If you're yield farming altcoins, for example, Pendle to Ethereum, then you want to think in terms of Ethereum, right? So we'll take a look at that example later on. But what I want to do now is to key in the value deposit of what I want to deploy. Let me just use $100,000 just to make the numbers easier. Don't worry about the graph on the right for now. And if I pull up the Ethereum chart, I could see that Ethereum is trading at a high price, right? And I personally prefer like a wider range strategy. I find that it's much more consistent when it comes to making a profit. We don't have to worry about impermanent loss as much or rebalancing, and our losses would be much less if the market draws down pretty aggressively. So if you guys are yield farming with tight ranges, you could still use this tool, but I prefer wide ranges. And if I'm trying to optimize for fees, for example, I could set a similar range like this, right? $2,500 to $7,000. So what I want to do now is key the price upper, $7,000, price lower, $2,500. And then the price now, it's trading at $43.75. I could key that in. And then if I were to deposit right now, I would key in this value here. You can see that the chart is pretty squished up, right? What I want to do is if I want to move the chart around, I'm going to click the left mouse button and then drag the chart around. And if I want to change the y-axis, I hit shift and then the mouse wheel when I'm on the y-axis and then the x-axis, I could do the same, right? So as you can see, you can move the chart around. And if the chart looks really bad, like really squished or really zoomed in, what we want to do in this case is go to the settings tab. So the x-axis is actually our price range. And to be able to see the chart, we actually want to start from 0 or some negative number. And then the upper range, you can see we're at 7,000. I'm going to put a little bit more, like at 9,000, just so we could see the chart nicely. And then the Y value is this V deposit value that we want to worry about. So X is the Ethereum price in this case, and Y is the value of the LP that I want to see. So if I deposit 100K, then maybe I put 150K, and then it's going to pull up a nice chart here. Once again, I could click and drag to move around and then kind of zoom in and out to basically adjust my chart so that it looks nice, it fits on the screen, and I could start my simulation from there. So let me explain what the chart means here. This green area is your quote asset, which is US dollar in this case, so USDC. As the price moves up from $43.75 to $7,000, for example, you can see that your LP would have this big green area, right? It means that if the price exits this range, you're fully into USDC. If the price exits the bottom range, then you're fully into Ethereum, right? So that's how the chart works. And this percentage term just means that this is the amount of Ethereum you need to have but it's priced in US dollar, right? It's 46.1. And you can click at the gray dots in some areas as well where the charts intersect. So in this case, I would need to have 46,000 something dollars worth of Ethereum. And then I would need to have the rest in USDC, right? 53, 54K here in this Y value. If you guys are confused, just watch the video again. You could basically repeat it at like a slower pace. Make sure that you understand what you're seeing. And the more you guys use this chart, the easier it is going to become. And what I could see is that as the price decline, this is actually my LP value. You guys could click and drag here near like the edge of the curve. And then you can see if Ethereum declines in value. If I'm fully into Ethereum at this point, when it exits the bottom range, then this is the dollar value that I would have when it exits the bottom range, right? And then at the top of the range, I could also click on this dotted line and then click on this gray dot. And then when I click it, it's going to lock it in. And then I could do that for the bottom of the range as well. So this is what I also like to look at. I like to look at like the worst and the best case scenario. What happens if the price go out of range on the upside? What happens if the price goes down to the downside? So on the upside here, if I'm yield farming with this particular range, I would have a 12% gain from capital appreciation alone, not including the fees that I would be earning this whole time, right? And then at the bottom of the range, I would have 67K if the prices drop pretty aggressively. And the risk and reward doesn't seem to be that great in this particular range, right? If I'm deploying USDC at the current price, it's not that favorable because I could lose a lot of money if Ethereum's price dropped down. So this is why I like to calculate this before I even deploy. And it depends on your assets as well. If you guys are swapping Ethereum into this LP, for example, then you're basically swapping a bunch of Ethereum into USDC. You're going to be taking profits on your Ethereum roughly at this current price, and you would earn a little bit more than the current price if the prices do move upwards. And if I want to know the percentage of impermanent loss, I could simply drag this price now button, or I could change it to, let's say, 6,000. You could see that I would be suffering a 5.6% impermanent loss. And this number basically means that if I held whatever I deposited separately, I would have slightly more, right? 7,000 something dollars more at this $6,000 price point than if I were in this liquidity pool. The reason why is because when we're in the liquidity pool, the asset ratio changes all the time. When the prices move up, in this case, Ethereum is being sold to USDC. So I would have less capital gains, right? And then on the bottom side, I would have impermanent loss as well because my USDC is being swapped to Ethereum. And then I would have less capital than what I would held separately. But the reason why we yield farm in the first place is because we can earn cash flow. And if you stay in range for a long time and the asset doesn't bleed out, you could still beat impermanent loss depending on the ranges you set. So the wider your range, the less impermanent loss you're going to have. If I just move it to a random number, for example, you could see as I widen the range, the impermanent loss number drops. And as I tighten the range, the impermanent loss number goes up, right? So if I move the price now to be near the current price, I tightened the range by quite a lot. This is what a lot of people do, right? Like let's say $5,000 to $4,000 at the price lower. You can see if Ethereum moves up aggressively, I would suffer a bunch of impermanent loss. And if the prices dumps aggressively, I would have much more impermanent loss as well, right? So that's something to consider. The wider the range, the less impermanent loss, right? The extreme example is like 0 to upper range is, let's say, virtually infinity. Then you could see impermanent loss is much less. If the price crashes to like $2,000, you could see impermanent loss is only 7%. If the price keeps moving up, the impermanent loss is only a couple percentage point, right? And this is also why I prefer wide ranges. The wider your range and the longer you stay in range, as long as the asset is not bleeding out, it's going to make it much likelier to beat impermanent loss and outperform holding in the market. And sometimes our goal is not to really outperform in the market. We're just trying to realize a profit. For example, right now, I'm yield farming Ethereum to USDC. I don't really care about impermanent loss because my goal is to sell Ethereum on the way up. earn some nice yield in the process. And if it doesn't reaches my target and Ethereum draws down, the worst case scenario is I end up with more Ethereum, right? I want to hold Ethereum in the first place, so it doesn't matter to me. And this is how I think about liquidity pools. So if I'm happy with that, I could click save here. And let me show you guys just another example to kind of like solidify how to use this chart. I want to, let's say, duplicate and let's do Pendle to ETH. So Pendle is actually a great DeFi protocol that has product market fit. You guys should be doing your own research. Again, none of this is meant to be financial advice. I'm not your financial advisor. So do your own research if you want to invest into Pendle. I am currently yield farming Pendle. You can see my entry is not the best. It's all the way up here, but it's still better than entering all the way up here, right? And then when I'm happy with the profits, if I'm not trying to be greedy, then I could also exit at this zone of resistance. So currently, Pendle is actually at a great price. If I want to enter into the LP right now, this is a good time compared to where we were back here, right? Especially if you guys believe that the altcoin season is coming, then this is a great entry. Objectively, we never know if the prices is going to keep continuing to crash down, right? For example, back here, we saw the price keeps dipping down, and this is on the log chart, so the bottom seems a little bit bigger. But here, if I turn it off, you can see that the price is basically resting in this zone of support, right? But let's say I want to enter right here at 0.001. Maybe my bottom of the range is at the bottom of this wick here at 0.0007. And if I want to have more fees, I would prefer the range to be like at the top of the range, maybe at 0.0023. So I could do roughly that here. And as I've explained earlier, the base asset is whatever's in front, right? Pendle. And the quote asset is in Ethereum. Now we want to think about the price in Ethereum terms, not in Pendle terms or in US dollar terms. Let's make this example easier and let's just say we're putting in 10 Ethereum and the chart would get squished, right? That's why we want to log in so we could save once we adjust it. So if I set the price upper to be 0.0023, price lower is 0.0007, and let's just say we deposit right now 0.001. Let's put 1 because we're slightly higher than 0.001 here. And again, I want to click this. And then if you want to adjust it faster, just click this. In the settings, X, I could start with 0 on the downside. And then on the upside, we're talking about the price, right? So the price upper is 0.0023. I want to overshoot it a little bit, maybe 0.0035 to make the chart look nice. And then the y-axis, I could put 0. And since I'm depositing 10 Ethereum, I could put maybe 20 to make the chart look nice. And then again, I could always drag it around, kind of zoom in and out a little bit on this chart. Make sure you're holding shift if you want to adjust the axis. And here we have the chart. So if I enter right now, I could see my expected downside and the expected upside to see if it's worth it, as well as the impermanent loss. So let's see here at the bottom of the range, you will see that I would end up with 7 Ethereum. So roughly a 30% loss or a 3 Ethereum loss here. And at the top of the range, it's around 2.6 Ethereum gain. So the risk and reward is not bad. And if I want to be a little bit more aggressive with my range, I can do that as well. If I want more capital gains, I could buy more Pendle at this current price. What I want to do is, for example, adjust the upper range to 0.0035, and then I could zoom out a little bit. And the price now we were looking at 0.0023, right? So this is the simulation price. And you can see if we adjust the upper range a little bit, now our upside becomes like 14.37 instead of that 12.6 number that we were looking at. And then on the bottom range, our downside is still around 6.87. So much better risk and reward because we're buying more Pendle at this price point. And if Pendle outperforms Ethereum, we're going to be able to close out our position at an Ethereum profit. So an expected drawdown of roughly 30 to something percent versus an expected upside of 40 something percent. And that's before we factor in the fees and everything, right? And if you guys, based on your own analysis of the market, if you believe that altcoins are going to outperform Ethereum, then this is a safer bet to be in because even if you're wrong, it's much better than entering all the way up here. If you guys enter all the way up here, if you're betting on a breakout, for example, but you're wrong, you're going to actually suffer a lot of losses. Chances are the fees you earn is not going to be able to cover that, especially if you guys run tight range strategies. So an entry here is much better than an entry up there. And again, the upside you could expect and the downside you could expect would depend on the ranges you set. But I am in this pool personally because I'm comfortable to take that risk. My ranges are quite wide, and let me just check what range I have here. So I actually widened my range a little bit because I want to have more capital gains. I don't really care too much about the fees. It's still earning me like 9 to 10% APR. That's pretty good. And you can see it's very normal that your position is sitting in a slight loss, especially if altcoins have been underperforming Ethereum, which it has been in the last few months here, just because Ethereum has been so strong. And we're in the phase of the cycle where a lot of people are rotating into Ethereum. Maybe they're rotating into the larger caps now, and then maybe these like mid to small caps are coming next, right? So you can see I have quite a wide range here, and I will show you guys the effects of the wide range. So in this initial example, my impermanent loss would be 17 to 18%, right? But again, it's not a big deal if your goal is to secure more Ethereum profit, which it usually is. I don't really care if I'm underperforming holding by just a little bit. And if I stay in range for actually a very long time, if you guys have this range, if we look at the chart here, you would have been in range for like pretty much almost 2 years, right? Throughout this whole bull market. So your APR that you generate is going to be much greater than this 17, 18% here, especially when the volume was really high last year. But let me show you guys how the number changes based on the ranges you set. So again, 0.003 and then max all the way at 0.6. So let's do that. 0.6 and then let's say 0.003 here. And I believe I deposited a little bit higher, so we could bump this up to 0.0012 and we could basically simulate my performance, right? The price now, if we were looking at the historical price action, the worst case scenario based on the previous price chart, usually buyers do step in at this 0.0007 and 0.008 zone. So what I want to do is kind of calculate my expected downside. So let's just say we go to 0.007. What I could see is that my position would be in a roughly 31, 32% loss, right? But on the upside, if we go to, for example, what we were looking at, 0.0023, let's see the upside, it's around 50%, right? So I'm comfortable to take that risk. I believe that the chance of it going higher rather than lower is pretty high. If the altcoin season comes along, in my opinion, Pendle would most likely outperform Ethereum. We can't really guarantee the result and tell the future. We just got to ask ourselves, are these two assets the assets that we believe in? We would like to hold for at least 6 to 12 months or potentially a few years that we want to invest in and accumulate. And when the profit taking opportunity comes, we want to take it, right? And you can see the impermanent loss in this case is only 6.4 something percent. So if I stay in range for a whole year, I would most likely be beating just holding in the market. And you can see here currently it's outperforming holding in the market simply because wider ranges tend to outperform holding in the market, especially if the APR is decent and the price fluctuation is not too much. Again, with this type of wide range LP, I'm not really trying to like get the max APR. Of course, I could go tighter, but doing this type of range, I would take less risk in the process as well, right? When the prices do draw down, I would suffer less impermanent loss and my total capital loss would be less as well. And another added benefit is that if you guys zoom in here, you can see that the liquidity is very thin here. And when that happens, I would earn much more fees in the process as well, right? That's why I prefer wider ranges. I like to earn those extra APR when these tighter range LPs get basically knocked out of range. And then I could also close out my LP at a really nice profit. But it's up to you guys how you set your ranges. I typically like to look at the weekly chart and try to stay in range for the next 6 to 12 months. For example, if you believe that the price is going to stay around this 0.0023 mark, and then the bottom range again is at 0.008, you could be yield farming with this range instead if your priority is fees, right? Again, my priority is more capital gains. I earn a little bit of fees in the process. I'm not really trying to squeeze out like the max APR with this pool. I just want my assets to appreciate while earning some nice fees in the process. So the tool is pretty complex, but if you guys just play around with it, I've used this hundreds of times. I always do this type of analysis before I deploy my capital to make sure that the risk and reward is worth it so that I don't take unnecessary risk. And with this, I try to get as high of a success rate as possible, right? And this method is really good for blue chip pairs like Pendle and Ethereum. And if you guys want to learn more about yield farming, I make a ton of free content on my YouTube channel. So check it out. Let me know what you guys think, if this video was helpful or not. Thanks for watching. I'll catch you next time.